Welcome to Real Estate Bees, the podcast where we explore the ins and outs of building wealth through real estate. I'm your host, Michel Kmiotek, and in today's episode, we're diving into the topic of starting small and working your way up the equity ladder. So, if you're a young investor eager to begin your journey to financial freedom, you're in the right place. Let's get started. It's no secret that many young people aspire to build wealth through real estate, but often they're unsure of where to begin. The idea of securing funding and investing in properties can seem daunting, especially for those just starting out. However, it's essential to remember that Rome wasn't built in a day, and neither is your real estate empire. Let me share a real-life example of starting small and learning through experience in the world of investing. As a 20-year-old eager to dip my toes into the stock market, I walked into my local bank wearing a white winter coat, saggy jeans, and worn-down sneakers. Now, the clerk's initial reluctance to open an investment account for me was palpable. Perhaps skeptical of my ability to navigate the complexities of the financial world, who could blame her? Despite her hesitations, she eventually agreed to assist me. Well, she just opened an account, but still, it worked. Looking back, I can't blame her for wanting to protect me from potential losses in the stock market, especially given my youthful appearance and lack of experience. Undeterred, I was determined to prove myself and make the most of this opportunity. She just wanted to protect me from losing all my money. It's understandable. So, after opening my investment account, I delved into the world of finance with fervor. I spent countless hours poring over financial statements, analyzing various companies and identifying potential investment opportunities. So, with just €300 to my name, I made my first foray into the stock market amidst the turbulence of the financial crisis. So, investing in companies both in US and Holland, it was not the best time to do so. As expected, some of my investments flourished while others faltered. But with each success and failure, I gleaned valuable insights and honed my investment strategy. Over the course of 3 years, my initial investment of what was it, like €300 grew to €590. Not a significant amount by any means, but a promising start nonetheless. But with each success and failure, I gleaned valuable insights and honed my investment strategy. Over the course of the 3 years that followed, my initial investment of €300 grew to €590. I know it's not a significant sum by any means, but a promising start nonetheless. Buoyed by this early success, I continued to allocate my resources into various activities and small endeavors, embracing the entrepreneurial spirit and seizing opportunities as they arose. So along the way, I encountered a lot of setbacks and a lot of failures. But I remained resilient, using each experience as a learning opportunity to refine my approach and grow my wealth. We couldn't really call it wealth back then, but it was a start. While I may not have technically achieved wealth during those initial years, I was steadily laying the groundwork for future success. With each investment, each endeavor, and each setback, I gained invaluable knowledge and experience that would serve me well on my journey towards financial independence. This real-life example underscores the importance of starting small, learning through experience, and persevering in the face of challenges. Whether you're investing in the stock market, starting a business, or pursuing any other financial endeavor, success rarely happens overnight. It's the small steps that guide you towards success that make the success big in the end. It takes patience, determination, and a willingness to embrace failure as part of the journey. Let's delve deeper into the unique challenges and opportunities that come with being a young investor. Being young is both an advantage and a curse in the world of investing. On one hand, youth brings with it a sense of optimism, ambition, and a hunger for success. Young investors are often eager to make money quickly, get rich fast, and show off their success to friends and peers. However, this impatience and desire for instant gratification can also be a double-edged sword. In their quest for quick profits, young investors may be tempted to take excessive risks. It goes along with your age. They chase after hot trends or succumb to the allure of getting rich quick schemes. They may overlook the importance of prudent financial planning, long-term strategy, sticking it out for the long run. And risk management is also incredibly important, so focusing instead on short-term gains and immediate rewards. Go for the long game. But the truth is, investing is not a sprint, it's a marathon, maybe even an ultra marathon. As you progress along the timeline of an investor's life, you come to realize that success in investing is not about going fast, but rather about being able to last. It's about having the discipline to stay the course, weather market volatility, and resist the temptation to deviate from your long-term investment strategy. One of the greatest advantages of being a young investor is time. With time on your side, you have the opportunity to harness the power of compounding returns and let your investments grow exponentially over the years. That also goes for your knowledge. It has to grow exponentially. By starting early and staying invested for the long term, young investors can maximize their potential for wealth accumulation and financial independence. However, this advantage can also be a curse if not utilized wisely. The temptation to procrastinate, to delay investing until a later date, can be all too enticing. But as any seasoned investor will tell you, the most valuable asset in investing is time. And the sooner you start, the better off you'll be in the long run. Another challenge young investors face is the pressure to keep up with their peers and the fear of missing out on lucrative investment opportunities. In today's hyper-connected world where social media feeds are filled with stories of overnight success and instant wealth, it's easy to fall into the trap of comparison and envy. It's important to remember that investing is not a competition. The game goes on forever and ever. You can neither win it because there's no end time, there's no end game, there's only your life and that's it. Another young investor will pop up and take over. There will be successful ones, less successful ones, but you should at least try and get into it early on. True success in investing comes from staying true to your financial goals, adhering to your investment principles. For instance, not putting in too much money and taking too much risk. And also to remain disciplined in the face of market fluctuations and external pressures. Sure, you have to get out when things are bad or just don't seem to go up anymore. But sometimes market fluctuations have nothing to do with the real estate investment that you made or the stock that you bought 2 or 3 years ago. In conclusion, being a young investor comes, of course, with its own set of challenges and opportunities. While youth brings energy, ambition, and hunger for success, it also brings impatience, impulsiveness, and a desire for instant gratification. To succeed in the world of investing, young investors must strike a balance between ambition and patience and embracing the long-term perspective and focusing on building sustainable wealth over time. Remember, investing is not a sprint. It's a marathon, perhaps even an ultra marathon. It's not about going fast, but being able to last. So stay disciplined, stay focused, and stay the course. With time, patience, and perseverance, you can achieve your financial goals and secure a brighter future for yourself and generations to come. Instead of fixating on where to find lending, aspiring investors should shift their focus to where they can find affordable properties. Starting small and gradually working your way up the equity ladder is key to long-term success in real estate investing. So, by focusing on affordable properties in an up-and-coming neighborhood, young investors can minimize risk while building equity over time. But what exactly is equity and how does it differ from wealth? Equity is the value of an asset minus any liabilities or debts associated with it. In the context of real estate, equity represents the portion of a property's value that the owner truly owns outright, free from any mortgages or loans. As property values appreciate and mortgages are paid down, equity grows, providing the owner with a valuable asset that can be leveraged for future investment. Wealth, on the other hand, is the accumulation of assets and resources that hold value and generate income over time. While equity in real estate is one component of wealth, true wealth encompasses a broader range of assets, including stocks, bonds, businesses, and other investments. By diversifying their investment portfolios and strategically allocating resources, investors can build wealth steadily and sustainably over time. So how can young investors begin their journey to financial freedom through real estate? The key, again, is to start small, think long term, and be willing to explore opportunities beyond the borders of perhaps their own cities or countries. The world is vast, and there are opportunities of wealth creation everywhere. Instead of limiting themselves to the confines of their local market, aspiring investors should consider expanding their horizons and exploring investment opportunities in other cities, states, or even countries. With advances in technology and communication, investing in real estate abroad has never been more accessible or achievable. Take, for example, the burgeoning real estate markets in emerging economies such as Brazil, Malaysia, or Thailand, or what have you. With rapidly growing populations, expanding economies, and increasing urbanization, these countries offer abundant opportunities for savvy investors to capitalize on the demand for housing and commercial properties. By investing in affordable properties in high-growth markets, young investors can leverage the power of appreciation and rental income to build equity and generate passive income streams over time. And with the right guidance and support, they can navigate the complexities of international real estate investing with confidence and success. In conclusion, building wealth through real estate is a journey that requires patience, perseverance, and the willingness to think outside the box. By starting small, focusing on affordable properties, and exploring opportunities beyond their local market, young investors can lay the foundation for long-term financial success and create opportunities for wealth generation that transcend borders and boundaries. That's all for today's episode of Real Estate Beast. Thank you for joining me on this exploration of starting small and working your way up the equity ladder. Be sure to tune in next time for more insights, tips, and strategies to help you navigate the world of real estate investing and achieve your financial goals. Until then, happy investing!